This is a work on forex trading, crypto trading, and stock trading. This is the lesson 3 of the work. It is delivered by Twigbe Izoge Lucky. Please, your advice to share, like, and comment on this work. The only thing that is at the seams is the chart. If you cannot figure out what it is telling you, do not trade. Wait for clarity. It will always come. But once it is there, you must place the trade and assume the risk and follow your plan. If you want to compete, you must minimize all distractions and all inputs other than what is on the chart in front of you. And trust that if you do, you will make a lot of money. It will seem unreal, but it is very real. Never question it. Just keep things simple and follow your simple rules. It is extremely difficult to consistently do something simple, but in my opinion, it is the best way to trade. Ultimately, as a trader understands price action better and better, trading becomes much less stressful and actually pretty boring, but much more profitable. If you trade without discipline and without a sound method, then you are relying on luck and hope for your profit. And your trading is unquestionably a form of gambling. Every successful trader trades on the basis of rules. Whenever traders deviate from those rules for any reason, they are trading on hope rather than logic and are then gambling. When the market is trending, most attempts to reverse fail. When it is in a trading range, most attempts to break out fail. This is the opposite of coin flips, when the odds are always 50-50. In trading, the odds are more like 70% or better that what just happened will continue to happen again and again. Trading through the rear view mirror is a sure way to lose money. You have to keep looking ahead, not worrying about the mistake you just made. They have absolutely no bearing on the next tick. So you must ignore them and just keep reassessing the price action and not your profit and loss on the day. A reliable sign that the pullback in a bull trend or in a trading range has ended is when the current bar's high extends at least one tick above the high of the prior bar. This leads to a useful concept of counting the number of times that this occurs, which is called bar counting. In a sideways or downward move in a bull trend or a trading range, the first bar whose high is above the high of the prior bar is a high 1, and this ends the first leg of the sideways or down move. Although this leg may become a small leg in a larger pullback, if the market does not turn into a bull swing and instead continues sideways or down, label the next occurrence of a bear with a high above the high of the prior bar as a high 2, ending the second leg. High 2 in a bull trend and a low 2 in a bear trend are often referred to as ABC corrections, where the first leg is the A, the change in direction that forms the high 1, and the low 1 entry is the B, and the final leg of the pullback is the C. The breakout from the C is a high 2 entry bar in a bull ABC correction, and a low 2 entry bar in a bear ABC correction. If the bull pullback ends after a third leg, the buy setup is a high 3 and is usually a type of wedge bull flag. When the bear rally ends in the third leg, This is a low 3 cell setup and usually a wedge bear flag. Some bull pullbacks can grow further and form a high fall. Although conspiracy theorists will never believe it, institutions do not have secret meetings to vote on what the price should be in an attempt to steal money from unsuspecting, well-intentioned individual traders. Their voting is essentially independent and secret and comes in the form of their buying and selling, but results are displayed on price charts. They can never hide what they are doing. When I say that the market does something for a reason, it never does something for only one reason. Whatever reason I'm giving is just one of the countless reasons behind the move, and I point to that one reason to give some insight into what some of the major traders are doing. You should always have a plan in case the opposite happens, since it will happen often. Usually, it is better to get out, but sometimes it is better to reverse. It is always most important to be aware that the exact opposite of what you believe will happen in about 40% of your trade. It is worth noting that some traders are so good at reading charts and placing and managing trades that they can win as much as 90% of the time. But those traders are rare.